Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar and this is effective for the week of October 7th, 2024. Let's get started. SEAF signals for this week have utilities, energy, and communication services. Energy coming up kind of from the depths after being there for much of the better part of the year, and technology having a sharp reversal and kind of coming, what was the signal last week, coming right back out with a very sharp reversal in the trading week. We have a nice strong leader in utilities. We've been kind of looking for that with a ranking of 5, tactical 2, and trading 2 in terms of its weekly rankings. Just kind of broadly, still kind of seeing a little bit of reshuffle. I think this market's generally trying to understand where it's going. So we're, as you saw, technology rocketed right back down, energy shot up. New entrant in communication services. Not seeing super strong rankings outside of utilities, but broadly, it's nice to see our strong leader here in utilities. Heading into our heat map today, energy really strong. So energy's trading week was a 0.93% increase in its flows on the week. We are ranked 3rd in the tactical month, and still waiting for the strategic quarter to kind of drop off. We're showing a slightly similar situation in communication services with its 8 kind of holding it back, otherwise having some relatively decent flows. Utilities coming in second with a 0.24%, which is pretty good for the second ranked sector on the particular week, and a really strong outflow from technology, negative 0.61%. Real strong reversal coming from what it was previously. We have something a little bit new this week about how we're going to highlight our rainbow charts. We're going to get to those in just about a minute. But as you can see here, we got some green sprinkled in the healthcare, financials, technology area up here, and some red sprinkled up. That really screams to me transitionary period. So kind of looking for these things to normalize still, as we've had some higher scores over the last couple of weeks. Overall, though, net increase in flows into all 11 sector spiders at 1.3% last week. And again, showing some real strength in energy. We're going to switch this up this week. So we have this new report. It's called the SEAF Model Review Rainbow Charts Update, providing data-driven context and color to sector rotation. This is something that is now available to every week for clients. And what this is just breaking down. We've had a lot of interest in the rainbow charts and a lot of feedback saying that they'd like to clients would like to see all 11 of the rainbow charts. So I'm going to buzz through some of the ones that are a little bit less important, but broadly we have this new report. This is available every Monday, and just wanted to kind of bring some extra highlight to it. So let's get started. First page, just kind of quick overview of what SEAF is, how it's ranked, how it's been working. It's really a momentum model for a sector rotation model that drives off of the momentum of asset flows coming into the sector spiders over 3 time periods. This is the table we're all familiar with, highlighting our rankings and how the sectors are doing, and which are the SEAF signals for the week, which always are the top 3. Going into our rainbow charts. Financials is toward the bottom. We've been seeing this kind of slide here going in from favored. As you can see, there's that corresponding move in relative underperformance versus SPY going into avoid. As of right now, financials is the worst on our chart in terms of its overall ranking score, and it's heading into that avoid with this downtrend. Energy, big spike in energy. As I said, it was a 0.93% move on the trading week, showing shooting right through neutral, right into favored. We are seeing this turnaround in relative outperformance versus SPY, which is coming from a very long downtrend. So we have a long way to go to kind of break this downtrend for relative outperformance. The one thing I did want to highlight was the price chart for XLE. And what we can see here is, see that relative outperformance. It actually recently broke through its 63-day moving average. This down here is a relative strength versus SPY. And like I said, recently broke through the 63-day moving average, which was really good, really nice to see for SEAF signal. We're also coming up against a very big resistance level right here This level cuts back all the way back to 11/14 of 2022. It is a big resistance level that we're kind of coming up against. If we can continue this momentum in asset flows that we have in energy and can break through this resistance level, we have quite a bit of room to run here for energy. So just an area to keep an eye on. Energy is a SEAF signal. It's currently ranked 2 overall and has the best trading week. So if we can continue this momentum and assets flowing into energy, break this resistance, we got some nice room to run for energy. Going and continuing down, technology came up, touch favored, and it's middling. We are seeing that in the relative outperformance as well. We're kind of in a sideways market for energy. There's a bit of a box here that you can that we can kind of see that gets drawn in right through here. We've been kind of stuck in this relative outperformance. We're bouncing in and out. Again, as I've been mentioning, I believe we're still in a bit of a transitionary period. As we've made new highs, technology comes through, and then we get little bits of pullback, and money gets flowing out of energy. It kind of screaming, some overvaluation in tech. But people don't want to miss that broader move forward if we continue to move forward, similar to the way we did in January, where money was kind of flowing in and out of technology rather rapidly as we were looking for a correction and weren't finding one. Managers were really kind of moving their money around. So we are seeing relatively dramatic shifts in technology in terms of the way money is moving in and out. And due to that, too, we are not getting that same stickiness from the back end that we would normally do to kind of sustain a move in tech. So as of right now, sitting mid-neutral for technology, kind of sitting in that box in terms of its relative performance. Technology is middling at this time. Utilities remain strong. A bit not in these giant swings that we're seeing in energy and technology in terms of relative outperformance, but just a nice and slow and steady increase in relative outperformance. We got a nice broader trend really going back to January of this year, but this newest trend, the end of June, early July, outperforming, nice solid outperformance, sticking in this upper favored ranking, now up at this 5. Utilities looking relatively strong. Moving into industrials. Industrials kind of sitting in this middle area as well, more or less sideways, having a slight, outperformance in relative outperformance, but not really seeing the flows being super sustained here in any given time period, which is really why industrials is middling. We've had little brief periods of outperformance, upper favored, but broadly sitting in the middle here for industrials. Looking at consumer staples, kind of starting to trend in the downward, just entered into neutral, coming from a relatively decent favored. We are seeing that underperformance in SPY as this thing tracks. So, consumer staples heading into that neutral, potentially even neutral avoid, and we are seeing the corresponding move in relative outperformance. Similar move from consumer discretionary, going from favored to neutral, now touching into avoid, starting to peak here. We peaked here with the favored about the same time that it peaked here on the SEAF scoring, and we were starting in that downward trend. It looks like a relatively decent move down. Was ranked 9th on the trading week, which was a reversal from its 5 on the tactical month. So consumer discretionary heading in the negative direction at the moment. Healthcare, similar boat, sitting up at favored about a month ago, give or take, heading into that neutral down into a void. We now see that slide in relative underperformance, and it's still pointing downward. Trending continued, 10 on the trading week, 10 on the tactical month after having a 4 in the strategic quarter. So we are really starting to, those flows from the quarter starting to drop off, really starting to see that momentum die, and underperformance in healthcare. Materials, the definition of middling, really haven't gone anywhere in relative outperformance, almost really for the entire year, kind of sitting in this tight range. Have had little spurts of favored with little spurts of avoid, really sitting in the middle. Nothing to do here for materials as it is pretty sideways relative performance market and sideways in our SEAF ranking as well. Real estate. Real estate still sitting in favored, a bit having a slight bit turnaround, 8 in the tactical month, 5 in the trading week. Really holding on to that strength from the strategic order at 2. We continue to see some of that money drop off from that quarter. I would expect us, without any new money flowing in, to start to kind of drift into this neutral. We are starting to drift downward in the relative underperformance versus SPY, though technically still in a bit of an uptrend coming in from July. Just a place to watch. Money can still flow back in here. We are not projecting cash flows. We are just using our algorithm to determine the SEAF ranking, and then we are matching it up here with the relative performance. So what is this telling me? We're starting to see some weakening in real estate. It could drift into this neutral and continue this downtrend unless we see injection of capital coming into real estate in the near term. Communication services on the uptrend. It is trading in this kind of box that we've seen going back to the beginning of the year. Would like to see some sustained outperformance like we did prior to that. But sideways, we are traveling into from neutral into favored. Communication services. Let me double check this real quick. Yeah, so ranked same as real estate. The way this works, though, is when we have a ranking that is the same. So we have 15 at communication services, 15 at real estate. The way this works is we then defer to the trading week, and 3 outscores 5. So communication services gets the nod here as a SEAF signal. We are trending in the right direction, going from avoid to neutral to favored, which has given this bit of relative outperformance swift change. I would like to see this thing continue to generate some cash flows, though a bit, again, wasn't a super strong at the 3.03% increase on the trading week. Would like to see some continued flows to try to sustain and break through what this top side resistance is on the relative performance part of the chart. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And if anybody could do me a favor, we really like this new SEAF report breaking down all the rainbow charts. If you could just send us some feedback on, if you like to see these charts, if you don't like to see these charts, like my commentary on them, I really appreciate any feedback. And I look forward to breaking down the SEAF model with you all next week. Thank you.